Chintan Thakkar, the CFO at InfoEdge. Chintan, hi, morning. Lots of questions for you, but to begin with, the investing community believes that your property business is close to breaking even. Do you think that's feasible, and would you say that that's a prudent assumption?
Look, the property business, it's still in an investment phase, right now. Given the kind of growth that we have and given the cost structure, in fact, even today, if we want to be profitable, it would not be difficult for us to be profitable if we just kind of, bring down a little bit of investment that's happening in branding. You'll show a healthy margin, in that business as well. And going forward, it may break even regardless, even if we continue to invest. However, that's not the objective that we are driving inside the organization. The objective is to kind of keep growing at much faster rate. And if we continue to grow it, it might, because we are not far from break even if we are investing, right? So it should not be difficult.
Right. Good morning, and can you give us a sense as to what exactly is the outlook on the real estate? Because we did see an improvement in the real estate business. Do you think that sort of a trend is continuing? Do you think that elections or lack of funding from NBFCs, that was going to disrupt the momentum in the sector?
Well, if you see past 5 quarters, we have been seeing consistent growth, and it is just not about how our revenues and our billings are growing, but it's also about how the traffic is growing on our site. So given all the operating metrics as well as the financial metrics, I think it kind of gives us confidence that I think there is something happening in the market, particularly on the resale rental side. We are seeing more movements. We are seeing the brokers kind of coming back into business. So I think that's a positive trend. And yes, there could be some blips here and there. Last quarter we did see some of these liquidity issues. And we'll see how much of impact that it would have on a continuous basis. But there are also certain stimulus, like the GST reduction has happened. There's a little bit of reduction in interest rate. There are expectations that interest rates can further go down. So given all that expectation as well, we think that it might balance it out, and we might see continuation of good growth. Having said that, I'm not kind of giving you how this quarter would be, but I'm just giving you a very macro picture of where we stand.
Tell me a little bit about your recruitment business, Chintan. Can it maintain that 20% billing growth which was seen in the first 9 months? And are you looking to, up the ad spends in the business because competitors surely are spending more?
Yeah, so on both parts, let's look at what the growth rates are, and when we kind of slice and dice about the components of growth, the elements of growth, what we have seen is that the growth has been pretty secular trend, whether it's a large business, small business, whether it's the repeat clients or the new clients. New products sale, the upgrade of the existing product. We have seen that the business has been kind of growing from all directions. So it's kind of a very sound growth. It's a very solid growth that we have shown in last 9 months. And I really see no reason why something should change. Because at macro level, again, we are not seeing any different trends, right? IT and IT-enabled services, which is a kind of a significant part of our industry vertical exposure, that continues to be doing well. And if I go by all the analyst report, they continue to kind of hire at a much higher rate. So yeah, I think there is all the possibility of we are able to maintain that in the days to come.
Now, historically, we've seen that whenever Naukri growth is accelerated beyond mid to late teens, you have seen some element of margin expansion. In the last 2 quarters as well, we've seen very strong improvement. What is the outlook now for Naukri and that overall margin correlation?
Yeah, I think the earlier question also, the second part was about the marketing spend. I think when you look at the cost structure, where there is more investment happening in the recruitment business is more on the technology front. We have been aggressively investing for future. We are looking at upgrading our talent in technology. We are hiring data science guys, so the top-notch, technical talent, is kind of, getting into our company, and we are investing a lot more on that front. So, and that investment will continue. So that may have a little bit of short-term impact on our margin. But we think that if we continue to grow at 20% or 20% plus, maybe there may not be an impact of that as well. So I don't think it's a significant impact, but yes, that's the investment that we are making. Marketing is not a big part of our expenditure when it comes to recruitment business. So I think a little spend here and more here and there. I don't think that's going to make a big impact. But yes, the tech spend is is kind of increasing significantly.
What happens to your realizations per unique client, and which direction would you say that would move when it comes to your recruitment business?
Like as I said that look, we are seeing the business growing from all aspects, right? So even if you look at the ARPU seems to be going up, the number of new customers seems to be going up. So the past 9 months have been really solid, and no matter how you slice and dice, we seem to be seeing the growth is kind of there consistently in all directions.
I wanted to talk about Zomato because, HSBC in one of the recent reports has assigned a value of about 3.6 billion, which is at a good 9% premium to other business models like a Swiggy. Do you have any plans to monetize your holdings in the near to medium term?
Look, I haven't seen the report, and so it will be very hard for me to comment on the valuation front. We are just an investor like any other investors, and we don't know what the operating metrics on an ongoing basis. But from the investment standpoint, we have about 26% our holding are actually at cost our investment is $25 million, right? So we are sitting pretty on a sweet spot. There is nothing compelling us for us to kind of offload that or exit out of it. Management is kind of doing well. So there is nothing compelling us to kind of do anything which is not supposed to be done, right? So I think we are happy with where we are. We already have almost close to 1,800, 1,900 cash on our balance sheet. So it's not that we are looking for some cash, or it's not that I mean, we also have a stock as our currency. So I think we are pretty fine with where we are.
Okay. Even a lucrative valuation wouldn't make you change your mind?
No, I think it's as I said that we are happy where we are, and I don't know the different people having different valuation. We are happy if if the valuation is strong, but I think company has a long way to kind of go. The whole delivery market, this whole centralized cooking seems to be getting disrupted. People are getting more and more delivery at home. And I think this is just the beginning of the trend, So I think from timing standpoint also, we think that I think it's okay to be where we are.
Okay, as of now, that's the take coming in with Zomato. But what about Jeevan Sathi? Can you tell us how the business is shaping up? What's the strategy here?
Yeah, so we have been investing a lot more in on the branding side of Jeevan Sathi. We are kind of number 3 if you look at national as a market, although truly speaking matrimony is a more regional kind of market, and there are certain markets where we are number 1, we are number 2. But if you see from the overall revenue standpoint, we are number 3, and we need to invest a lot more on the branding side. Maybe we under-invested in the past, so we are kind of aggressively investing in that brand. And if you really take that incremental investment that we are doing in branding, and if you take that out, I think we have been growing very well, not only from the top line perspective, from the volume perspective, but also from the way the cost structure is and the way the operating leverage is. So I think it's a very efficient growth that we have been showing, and that gives us a lot of encouragement to continue to invest more in that business.
All right. Thanks very much for sharing with us the outlook on the business and how things are shaping up for each of those properties, Jeevan Sathi as well as Zomato. What exactly is the outlook on the property business as well? That's the take coming in from the management of Info Edge.